Good morning, everybody. Today is Wednesday, February 21st, 8:46 a.m. And today is going to pretty much determine, I believe, the trajectory over the next 4 to 5 months until we get a rate cut over what's going to happen in the stock market. Ladies and gentlemen, today Nvidia reports after the bell at 3:45, I'll start the stream at 3:45. There will be reporting probably at like 4:05. I will be a nervous mess struggling to try to get the numbers. We're going to see the stock go up, see the stock go down. Maybe it goes down 2%, goes up 2%. But at one point, what the markets are pricing in is an implied volatility, an IV of 11%. And based on if the IV goes up or down, I might need to go to the hospital and get an IV to recover from how incredibly, monumental this earnings really is going to be. The market is expecting Nvidia to go up either $200 billion to the upside. So it goes from about $1.79 trillion to close to $2.02 trillion in market cap, or down from 1.7 to about $1.5 trillion. It is going to be one hell of a day. It is going to be very exciting. I'll be here at 3:45 p.m. So I hope you all will be here and joining me. And today we're going to discuss everything that's going on. Now, on today's market open, we've got a lot to discuss. We got an entire market that's red, whether it's crypto stocks, whether it's SaaS stocks, whether it's solar stocks. We've got earnings from yesterday, Enovix, SolarEdge, Teladoc. We've got a lot of stuff to recover or to go over. Some of these stocks may not really recover anytime soon. All of them are down. And I think all of them are down because they're a little afraid that Nvidia is going to crap the bed, or Nvidia is not going to crap the bed, but Nvidia's run up so much that the market's still going to let it crap the bed. And as a result of that, the entire market is not prepared to handle what Nvidia is going to show. So we got a lot to talk about. It's going to be a hell of a day. It's going to be really exciting to see what happens. And today's the day that we've been waiting for. This will end off earnings season. We are not going to have to worry about earnings until May. It's been a long earnings season. So we've gone through a lot of these companies, and we're going to have about 3-4 months to chill. But today's going to be the day that lets us chill nicely or lets us chill sadly, given what Nvidia is going to report. Let's get into it. Thank you all for being here. Sean Patel, Trucker Rob, TPL Juju, The Foolish Hiker, Top Dasher, Juan Carlos, I Show Sad, Tricoma, Brent, Billy Bag Donuts, Alex, Doug Frederick, Felicia, Richard, Irwin, Benny, Lloyd, Kevin Benjamin, Dax, Iceman, JJ, Ray, Quick Pump, June, Canman, Other Zinc, Elon Musk's Daily Life. That's a great username. You said Palantir is getting a little murdered. Yeah, we'll talk about what's happening with Palantir. Lyndon, Shempasta, Jacquees, Dexter, Alex, Brian Knight, Nolan. All right, let's get into it. We're going to start off with a poll. The poll is going to be the final poll before we officially have earnings. And the poll is going to be essentially, do you think Nvidia is going to go up or down? Let's get everyone's thoughts. We'll leave this poll open for a while and see what people have to say. And then we'll keep going from there. So Nvidia up or down today? Up and down. Let's see what the general sentiment is. Now, I think it's going to go well. Okay. I think earnings are going to go well. I don't know if the stock is necessarily going to react to earnings going well, primarily because of the fact that the stock is up already 45% year to date. If we can look at the stock right now, as you can see in the pre-markets, let's go through a couple equities and then we got a bunch of stuff to talk about, but just a high level overview of equities. Stocks are down, and stocks are down pretty aggressively. Palantir is down 4% in the pre-markets. It was down 5% yesterday, then recovered a little bit, and then it started to make its way down. So as you can see right here, we have Adobe that's down about 1% in the pre-markets. Palantir, here you go, 22.47. We haven't seen the mid 22s in a long time, down 3.97%. I've got a lot to say about Palantir in terms of dilution and insider selling. So after we do a little bit of an Nvidia preview, we'll do the Palantir segment and we'll talk about all the stuff that's going on. I know there's a lot of confusion out there about what's going, so we'll talk about that. Enovix down 8.7%, Super Micro down 4.52%. Walmart's the only thing that I see that's green in the pre-markets. ARM is down 4%, PayPal down another 1%, Celsius down 1%, CrowdStrike down 10%. The reason why CrowdStrike is down 1% is because Palo Alto Networks is down 24%. We're going to talk about that in a little bit as well. Now, if you don't know what Palo Alto Networks is, it's a cybersecurity company. It's a $115 billion company. Not anymore. It's going to be worth probably $100 to $95 billion today. And it's a big SaaS company. It's a company that's been, done very well over the past 5-6 years in the SaaS space. Their earnings were so bad that they reported $1.7 billion of net income on top of $2 billion of revenue, which is an 85% net income margin. And I don't know about you, but I've never seen a public company show $2 billion in revenue, $1.7 billion in profits, right? I've never seen 85% net income margins. 1.5 out of the 1.7 billion was a tax benefit. And so the streets saw that, and I think they were like, I know you're allowed to report that you got 1.7 billion off and 1.5 billion was taxes, but we don't give a shit. Your guidance is horrible. Your revenue growth is horrible. Not for a fast-growing tech company. We're taking you down 24%. And as a result of that, CrowdStrike ended up falling. As you can see right here, down 10% because they're in the cybersecurity space. And Zscaler as well fell about 9% since they're in the cybersecurity space. So it's all red. If we go to the crypto stocks real quick, well, first, Mag 7. Mag 7 is all red. Apple's a little green. And then Amazon's a little green. Everything else is red. Tesla's down about 1%. Nvidia down 2%. Google down. We have to talk about Google. If you caught Finance Junkies last night, we figured out some stuff about Google, and it's making it really hard to give an investment thesis for Google. So we'll talk about that in a bit. And then if we look at crypto, we got a pretty red day across the board. Coinbase, it's lost everything they got from earnings, now at 166. CleanSpark down 7%, 1540. Marathon down 6%, Riot down 5%, Cypher down 6%. Now you might be saying, why are these companies down so much when Bitcoin is still at 51,000? Robinhood down 2.34%. If we can maintain 13.5, that's all that matters to me on Robinhood, but let's see if we can do that. And the reason for that is because now that Bitcoin is kind of normalized in this 50,000 range, it needs to keep going higher in order for these crypto stocks to have momentum. Like, these crypto stocks will get dumped if Bitcoin does not keep going higher. That's just the name of the game. Even though they were at they were closer to their levels that they are in the pre-market when Bitcoin was at 45,000, Bitcoin at 51,000. You shouldn't go back to those levels. But it's not really Bitcoin, right? It's these companies that get pumped and dumped as Bitcoin keeps going up, and it needs to keep going up in order for these companies to keep doing well. So we've got a lot to talk about in terms of what's going on in the pre-market. There's just a ton of stuff that's happening right now, right before Nvidia ends up reporting. Kyos, good morning. Palantards, good morning. Thank you for being here as well. We'll talk about the share dilution, and there was a lot of insider selling on Palantir yesterday. Some of it was probably scheduled, so it's not the biggest deal in the world. But nonetheless, it does seem like that 25 level of resistance was hard because there were people that have been selling. Let's get an update from Tom Lee on what he thinks is happening with Nvidia, what he thinks is happening in the macro, and some interesting points around how small caps can perform, which is his thesis, if large caps don't perform. Let's hear from him, and then we'll keep going from there.
So let's dive into all this and bring back in our friend, Fundstrat Managing Partner and Head of Research, Tom Lee. Are we wrong to say that Nvidia matters to the overall market?
Nvidia is hugely important. A lot of eyes are on tomorrow, as you said, and it's going to be very telling us about how much firepower still exists in the market. If Nvidia has a great report and rallies, I think it's going to confirm we're not really at the top of the first half 2024 market top. But there's an equal chance that Nvidia has a great number and the stock sells off. And I think that's going to tell us perhaps a lot of the buying power is used up. So I think it's very important.
Yeah, here's the thing about Nvidia, and I'll give my take, and you say, no, Sullivan, you're wrong as usual, which is Nvidia will probably beat street estimates on EPS and sales. Okay, they do every quarter. It's a measure, I suspect, of obviously the guidance matters a ton, but how much they beat by. This could be a time, Tom, where we see a company blow away estimates and it's still not be good enough.
Yes. Anecdotally, I'm finding a lot of our clients thinking the company is going to beat and sell off, which tells me
exactly what I just said.
Yes. And that's why I actually think the bigger surprise would be Nvidia rallies tomorrow, and it shows there's still legs left in the rally of the first half. But that's just an anecdote.
How much?
Notice Tom keeps saying rally in the first half. So Tom has been on the record saying this rally we've seen to almost 5,100 on the S&P, it's going to pull back aggressively, and we're going to have that rally again, but it's going to be in 5-6 months. And so I mean, today is going to be the day to determine if, maybe that rally continues for a bit more or if it starts to fall back.
Matters in the guidance versus the actual quarterly numbers last quarter?
All of it's going to matter. And as you know, because a lot of things have been priced into it, people are going to look for little wrinkles and, blemishes. So a lot is priced in. But, I think if there is a sell-off, I actually think it's going to be viable for the most part.
And you've been bullish. You've been right. You've been out there with there's like a couple of you guys that were on your own island for most of 2023. It's a very lonely place, by the way.
Yeah.
But you survived, like Tom Hanks. You had a volleyball
Yes.
as a friend, and you've prospered. You still remain bullish for the year.
Yes.
Is Nvidia the biggest risk to the market? Is the Fed the biggest risk to the market? Is the election the biggest risk to the market? We have to factor in the macro stuff. What do you think most about?
I think the Fed's the biggest risk because the market needs to broaden, and it's going to broaden when interest rate cuts start to get priced and investors begin to think about that roadmap. And if inflationary pressures don't ease and the Fed starts to sort of second guess that, I think it puts a lot of pressure on stocks.
Is there a not zero chance, or is there a zero chance we get a rate hike this year? People are now starting to talk about that again. Or is that a 0% chance in your mind?
I mean, I think that the probability is low in actuality, but the market could get concerned about it. And if it does, that would put pressure on stocks. And
January is 1 month doth not a trend make, as you know more than anybody. January's numbers were hot. We saw in the early 80s, late 70s, inflation can look like it's whipped and then it comes back up, right? We saw that again. It can be sticky, as they say. If we get more hot inflation data for February, does that hit stocks? Because now the Fed is suddenly back in play again.
I mean, I'd say it's really bad if inflation's hot in February, because how would you convince the bond market and the Fed that inflation's falling?
So, I mean, I think Tom Lee's right there. Now, he goes on to say that inflation is probably not going to be hot in February, which I agree, unless the shelter inflation, which we talked about the housing data last Friday, that was not good data, dude. That housing data was bad. Like, mortgage rates are at 7.43. We have high since December. We haven't sold as many. We've sold as many. We have not sold the lowest. We've sold the lowest number of houses since April 2020, when there was a global pandemic. You would think we would sell some more houses since then, which means prices are going to go up because there is a large amount of demand chasing a small number of houses. And so it's a very peculiar situation that we're in right now in regards to inflation. But the far majority of inflation is dead. It's just that last thing, that's shelter, that's kind of tipping it off and keeping it alive. Now, one reason for why Nvidia might tank the market that Tom Lee didn't talk about, Jeremy says that's a bit high for homes. Yeah, 7.43% mortgage rate is a bit. Dude, my parents locked in this house at 3.1 back in December 2020. We got really lucky and we bought this house. Like, we didn't even know this was like the time to buy the house. This was just like, or we knew it was the time to buy the house. We didn't know it was going to be a phenomenal time to buy the house, given what was going to happen over the next couple of years. But it's just tough. I mean, some people might be just sitting and waiting until these rates come down for them to buy. Here's one reason that Tom Lee didn't mention for why Nvidia will absolutely tank the bed. And he probably couldn't mention it because they came out last night around 10 p.m. Jim Cramer said that the AI giant isn't anywhere near its peak. He said this last night on his show. So if, history repeats itself, then Nvidia's at the top and it's going to be it's not going to be a fun earnings, dude. It's going to be tough. It's going to be tough. So we'll see what ends up happening, but that's some other analysis, if you count that as analysis, for what's going on with Jim Cramer. Jeremy says, I'm in at 2.75% in October 2020. That's phenomenal. TJ says, we are closing on a home today or tomorrow. Our rate was just under 6%. It's a different time now. Yeah, getting under 6% is actually good compared to, 2020 and compared to what people are getting right now in the open market. So that's not bad at all. Johnny boy, thank you for being here. Adam, thank you for being here. Okay, so let's talk about Palantir. Let's do a segment on that, and then we'll discuss all the earnings from yesterday. But the point is, Nvidia's today. Some companies are projecting about $175 billion of revenue by full year 2026, which means they would put up really good numbers in 2024. Other companies are saying, no, it's going to be about $100 billion in 2026, which means the numbers are not going to be that good in 2024, or they're going to be good, but they're not going to be that astronomical. The point is, they're going to report about $20 billion in revenue, so that's going to be up 200% year over year. This is like consensus estimates. and they're going to be reporting $10.5 billion in net income. Last quarter, this year, they reported $1.5 billion in net income. That is a 1,000% increase in net income. If the street tanks Nvidia like 10%, $200 billion in market cap, because they 10x, not their revenue, their net income, what goes down to the bottom line, I don't know what more you could ask. All you could say is throw up your hands and be like, all right, so it ran too fast. The street is not comfortable with it being up 50% year to date. So they're going to sell it off. But like, that would be a dip to buy, in my opinion. Like, if there's no crazy guidance that things are going to be bad for the next couple of years and that semis are really cyclical, which they might be, if they tank 11%, and they 10x their net income and they're guiding for amazing growth, maybe that's not the worst dip opportunity in the world. Now, if the stock runs up to 850, I wouldn't chase, because it's probably not going to be able to meet those expectations quarter over quarter, and eventually it will fall back down. Maybe this quarter is the quarter it's not able to meet those expectations and multiples, and we get a dip. But it's going to be a hell of an earnings, and it's going to be time for Jensen Huang to really show if, yeah, this is an AI revolution, but is this really bigger than the internet? I mean, think about this. Everyone's been saying AI is bigger than the internet. The internet has created God knows how many trillions of dollars of value. And it happened throughout 10 years. It happened really from that 2002 era all the way to, I would say, 2015. That's what kind of justified Web 2.0. Web 3.0 was a scam. Crypto, I mean, like, crypto's real, but all the crypto companies were saying they were going to change the world. They're going to make the decentralized Facebook. It's like, no, you weren't. All that shit was stupid. But AI is real. And if AI is real and Nvidia actually puts up the numbers that really show this thing is actually bigger than the internet, you know, Sam Trillion trying to raise $7 trillion, maybe we aren't bullish enough, or maybe the multiple is getting ahead of itself. We will find out today at 4 p.m. We will see what ends up happening. All right, let's talk about Palantir. So I wrote on my Substack yesterday. If you are subscribed to the Substack, we crossed 3,000 subscribers. So shout out to everyone who is subscribed to that. I'll put the link in the chat. But I wrote extensively about this last night on what's happening with Palantir. Here it is in the chat. Now, let me share this right now. Obviously, we've got some dilution on our plate, right, when it comes to Palantir. And that dilution has been about 110 million shares. So as you can see right here, this registration statement registers an aggregate of 110 million shares of the registrant's Class A common stock, all of which became available for issuance under the 2020 plan on January 1st, 2024. Now, immediately, a lot of people got really upset about this. They were like, okay, if you're diluting us by 100 million shares, that's not good. Like, that's not, that sucks as shareholders. And I have a couple thoughts on this. We're going to go through, and then we're going to talk about buybacks in the context of share dilution, because it really doesn't make sense to issue 110 million shares and then do buybacks as well. Okay, so my few thoughts. Number one, this was not a surprise. It's part of a plan set in 2020, so investors really can't be surprised that we got diluted by 110 million shares. By the way, they have 250 million shares that they're able to dilute by. They are allowing 110 million starting in 2024. So it could have been 10% dilution. It's actually 5%, which makes sense, but it can't be something you're surprised about. If you haven't read the 10K in the past couple of years, then you might be surprised, but that is something that was set in stone. Second of all, this is not to raise capital. We have almost $4 billion in cash. This is not like a company that's like, they need money to like pay their bills or something. This is a company that is issuing these 110 million shares to pay for stock-based compensation. Stock-based compensation is 22% of revenues. It used to be 70%, so it has come down significantly. And here's like my main point around this entire thing. Stock-based compensation is worthless, with a bunch of exclamation points, as you see right here, if the stock doesn't go up. If I issue you stock and the stock stays stuck at $25 for the next year, $6 for the next year, then this is not going to work out, right? Employees are not going to be motivated. So to me, this isn't some reckless spending using shareholder capital. This is more so, hey, we need the best talent in the world. We're going after a gigantic market opportunity in AI. We're competing with Amazon, Google, and Meta that are offering $700,000 plus equity to these people to optimize advertising. So we need to give them stock to be motivated. They're not going to stay in the company unless the stock goes up. You're not going to stay 3 years if the stock is stuck at $20, $22, etc. So we are all aligned on getting the company to perform, which is what Karp has said many times. This is why at $6, if you join the company, I mean, that was a hell of a time to join Palantir. You're up almost 4x on those options, or on those restricted options you got when you joined the company, because they became GAAP profitable, they started to grow. And ultimately, that stock-based compensation started to make a lot more sense. So in order for the company to perform, aka grow massively, you need the best talent, and growth solves all. If AIP demand is off the charts in the word of Karp, then SBC will be going to talent to capitalize on that demand and hopefully get closer to 30% CAGR we all know Palantir can get to. In summary, we need the best talent. They need the stock. They won't stay if the company stock does not go up. So even with dilution, the idea is to grow fast enough so that dilution does not become a concern long term. And so that and you need the best talent to grow. Nvidia has diluted, Amazon has diluted, Tesla has diluted. If you look at their shares outstanding over the past 5 years, they have all gone up, and they've all gone up because they need the best talent in the world in order to make sure that the company performs. And as a byproduct of the company performing, the stock will outperform. Now, in order to get the best talent, you need to recruit them. In order to motivate them, you need to give them the stock. And the only way this theory works is if the company grows, which is why I said growth solves all. Now, look, we're at 20% top line growth. We're at about 40% US commercial growth. If those numbers can get closer to 45% and 25% throughout the end of this year, I think this 110 million shares is not going to matter because investors will buy the stock. Institutions will buy the stock because the company's growing. And many companies are on the stock market. They don't grow. They don't have a moat. They don't have any tech IP. If Palantir actually does that, yeah, they issued some shares, but I mean, you can't really get mad at them. They need to get the best talent in the world in order for this to happen. So to me, stock-based compensation aligns employees' interests with those of the company and shareholders. When employees hold stock options, they have a vested interest in the company's success. They're going to be actually trying to make these boot camps work. These compensation packages are not going to salespeople sitting in a cubicle trying to, sell through LinkedIn. It's going to engineers leading boot camps showing off some of the most sophisticated software on planet Earth. So to me, I think the stock-based compensation is not that big of a deal. At the end of the day, I think, they need to be able to issue these shares. Now, what Sachin says here in the chat is also really important, right? According to Peter Thiel himself, the annual dilution should not exceed 6 to 8% for companies that are increasing free cash flow, like Palantir is, or revenue and EV in excess of 40% year over year. And given Palantir has exceeded that metric all time, the company has cash and they agreed to buy back $1 billion, and that hasn't happened. So some criticism is fair on Palantir. So in the context of what Sachin is saying, number one, yes, you need to be increasing your free cash flow and your top line revenue growth if you're going to be diluting shareholders at about 5% annually. In the DCF that I've done, I have adjusted operating income margins of about 35% and 3% dilution. And that dilution can go up, right? Like you can dilute, you can issue more shares, but what has to offset it is increases in adjusted operating income margins, faster revenue growth, right? Like some metrics have to go up if other metrics go down in order to be able to show that it's okay, that we have more shares outstanding. In general, when a company issues more shares, if I have 10 shares of a company that has 100 shares and I own 10% of the company, well, if the company issues 200 more shares and now I have 10 shares out of 200 shares, I have less ownership of the company, which is why it's bad for shareholders. But if the company is growing faster and institutional investors are more excited to invest in the company because, yeah, they issued another 100 shares, but they're growing 34% year over year versus 14% year over year, you attract more people that are willing to buy up those outstanding shares. Now, in the context of buybacks, let's talk about that for a second. I think personally, the buyback was just something to say to get Wall Street to be happy. This is my opinion. I think Palantir has zero intention of buying back their stock. Why? Because look, they issued $1 billion of buyback in terms of share authorization. Everyone is saying, well, why aren't they buying back the stock? Why aren't they buying back the stock? Well, number one, and we've talked about this on the channel, even at $22, $23, the company is worth almost $50 billion and they're guiding for 2.6 billion in revenue. Like on a conventional basis, 55 times price to free cash flow. Their fancy financial managers internally in Palantir probably know the stock is a bit stretched. Why would they spend $1 billion on a stock that's probably going to pull back a little bit? Now, could it also go to the moon? Sure. But could it naturally pull back? Yeah, that's very possible. That would be a waste of capital because then they would be underwater on their own stock that they bought back. Second of all, let's say they bought back stock at $23. They on $1 billion, they would only take 43 million shares off the outstanding shares, and they're just issued 110 million shares. So to me, it's like if you're going to issue 110 million shares this year, and let's say your stock normalizes at 23 and you buy back those shares, you're taking off 43 out of the 110 million shares. That's not even 50% of the shares off the new shares that you issued. It makes zero sense. On top of that, you need the extra billion on short-term treasuries for net interest income. You need that 3% or 5.5% to be able to make sure we're GAAP profitable. Now, I'm sure we're going to be GAAP profitable without the net interest income, but that EPS is probably going to go down because if we're getting 40 million from the treasuries and we're getting 70, 80 million from the own business, we can show EPS trending upwards and to the right. And as long as interest rates are high, why wouldn't we take advantage of that free money basically coming in? Why would we artificially, let our EPS go down versus giving us more time over the next couple of quarters to subsidize the time we need to get the business to grow faster so that eventually when those interest rates come down to 3%, maybe in a year, then that interest income is not that exciting. And then we can utilize that money in a different way. Finally, I think Palantir realized that if we didn't buy the stock at 14 to 18, why the hell would we buy the stock at 22 to 23? Like, that makes no sense to me. Like, like if you weren't buying from $14 to $18 and you issued this in Q3 of 2023, so in August, they said we'll do $1 billion in buybacks. Well, it's been what? Since August, it's been 8 months and you haven't done buybacks. And for 7 of the 8 months, the stock was under $18. We were in that $16 purgatory. I mean, I would be upset if they bought it at 23 when they could have bought it at 16. And I think they might be waiting for that to happen again, which maybe it happens, maybe it doesn't. But so far, I do not think they have any motivation to buy back the stock if they're issuing these shares. Sachin says dilute 10% if you can grow revenue year over year by 60%. That's not happening, which is why people are a little upset that you're diluting 5%, but you're only, growing 20%. Now, granted, I'm going to give them a couple quarters to really see, is this AIP bootcamp thing just being sandbagged? I mean, everything I'm seeing anecdotally is that this thing is scaling at a magnificent pace, right? Karp saying AIP demand is off the charts. We're getting bombarded with applications. These tickets are like rock star concerts. You can't even get into a bootcamp. If all of that is true, the numbers will prove it. And I think we got to wait 6 to 8 months to see if those numbers actually prove it. And so we will see. We will see what happens. Sachin says extreme swings can even test the $16, $17 range in my opinion. Yeah, I think the $16, $17 range can be tested. I just think there's a lot of buyers that are going to be at 2021 if we get a pretty big dip. And if those buyers are there, then, they might end up taking advantage of that. Eeyore says, big agree. The buyback is so small compared to the market cap is more valuable as a possibility than actually to do it. And this is my opinion. This is my opinion and this is my belief. And I've said this since August. I never thought Palantir was going to buy back their stock. Because even at $16, it was a bit overvalued given the growth. The growth was 13% year over year. The reason they announced the buybacks that quarter is because they reported 13% year over year growth. Like, it was horrible growth. Everyone knew it was horrible growth. So the one shining light of that quarter in August of 2023, if you remember, by the way, stock was $20 at that time. It wasn't even 16, which was a little bit more egregious for 13% year over year growth, was the buybacks. And I think that calmed down Wall Street a little bit. Like, okay, so they believe they're undervalued. They're going to eventually buy back their stock. I personally, and I've said this in August, like, I never thought they were going to buy back the stock because it just didn't make any sense. You already knew the stock was a bit stretched. Now the stock at 22, even though the growth has changed, is still a bit stretched. And so if it gets back to 16, I wouldn't mind if they buy back the stock. But I don't think, I don't know if we get back to 16, and I don't know how comfortable Palantir is putting that money into stock versus getting net interest income to ensure GAAP profitability. And so we'll see. We'll see if it ends up happening. If it gets back to 17 or 19, to me, I think that is a exciting dip. I just don't know if they get there. Nvidia is going to pretty much determine everything today and see what happens. Sachin says, if Nvidia doesn't beat by huge margins today, I guess we will get to buy Palantir again between $18 and $20. Yeah, I think that's the same thing. And so today is going to determine everything. But that is my take on buybacks and everything that's going on. Now, we also did get a bunch of insider selling. I'm still trying to figure out if this insider selling is... these forums are so annoying, guys. Like, you try to understand them, you try to read them, you try to reasonably, like, just have a basic understanding of them. I don't know if these are scheduled or if these are not scheduled. So this is Stephen Cohen selling 400,000 shares or 405,000 shares. And I tried to, like, figure out, is this scheduled or is this not scheduled? And I can't really figure that out. If someone else can figure that out, let me know. But, like, some of it says scheduled, some of it doesn't. Like, this one says date of planned adoption or giving of instruction if relying on Rule 10b5-1, which is scheduled. But other forums I've seen don't have that. So I'm like, all right, is it actually scheduled or is it actually not? So you got that one that was sold. Then you have this one. You guys can see this here. Yeah, you have this one. You have Shyam Sankar selling 225,000. Some of these might have just been conversions from Class A stock to Class B stock. Again, I'm waiting for more clarity on this, but just showing you guys that shares were sold yesterday, even if they were restricted options or they were scheduled sales. And then you got this one. You got Karp selling about 585,000. All of these were sold at the $23 range. So they got the top yesterday. And then this one was another one by Karp, 650,000. Again, I think a ton of this is conversions and scheduled and exercised options. As you can see right here, you see how it says exercised options right here. So to me, I don't know if all of these are just direct sells, and I'll probably get more information by market close and let you know. But there was insider selling, and that coupled with 110 million shares of dilution, coupled with the general fear for Nvidia tomorrow, that's what led to the decline we saw yesterday and probably the decline we're seeing today. Right now, Palantir at down 4.53% at 22.34 on the day. Nvidia is after the market. Nvidia is after the market. All right, let's get another update on. So that was everything about Palantir. Let's get another update on Tom Lee talking about money that's on the sidelines. This is a take he did this morning, not last night. And then we will keep going from there. Here we go. He is talking about patient money that has been working the last few years.
Guest, who is Tom Lee, says he expects stocks to draw down at some point in the first half, but hasn't seen the signs of a near-term top. Let's bring in Tom Lee, managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. I referenced our conversation. We weren't in makeup per se. Sometimes we talk in makeup. This just happened to be outside of the makeup room.
Yes.
But we're still talking. I like it better when we're actually sitting down and sort of, you know, I feel like that stimulates me when we're both. Not really. You said immediately there's some dry powder left. It's not over yet, although there are some signs of fatigue.
Yes, I mean we've rallied 16 weeks, up 23%. The last two sort of long rallies were 16 to 19 weeks and 21 to 22%. So it's mature, but we don't see the signs of the tops. Normally, like margin debt is only 700 billion. It was 900 billion in October 21, and there's still 6 trillion of cash on the sidelines. And even this week into Nvidia earnings, I kind of see the stock kind of weak into the report, which makes me think the stock could surprise to the upside. And I think that would sort of help us get some more juice on the upside from here.
That's interesting. The one of your calls, which and I remember at the time we just said stop doing that. It was like a weekly call for the S&P based on an inflation number, on a friendly inflation number. Last week we did not get friendly inflation numbers. But do you think that the trend is intact?
Yes, I think there are some difficult seasonals because companies raised prices in January that made January look like a hot CPI number, and I think February CPI, which comes out next month, is going to reverse some of that, and it's going to put investors in the bond market thinking inflation is falling again. So,
oh my God, that'd be a great time for another one of your calls. If you hadn't sworn off making a call on where the S&P will be in a week, that would be a good time to do it, but don't.
Yes, I've promised myself not to do that.
Okay.
But can I just ask one question? Given this sort of short-term bearish, would you call it short-term bearish?
Well, I think there's going to be a moment where investors have to get cautious, but it's a maturing rally, so I don't think this is.
So I guess the question is, for those folks who are sitting around with cash right now, everyone's always trying to figure out, I have little cash. If they have cash, what am I supposed to do? Are they supposed to wait for some kind of grand moment to put it in the market? And of course, timing is always sort of a challenging thing to do. Are they supposed to put it in Bitcoin? I know we'll probably get there in about a second. What would you be doing with your money if you knew things were about to get worse and not better?
Well, we know markets have a pretty good 12-month runway from here, and I don't think investors should be 100% cash. I think if they have been sitting on cash and missed a lot of this 24% move, I think they need to dollar cost average, put a little bit in on weakness. And this has been a kind of a weak week. And then just be patient. I think patient money is really the money that's been working the last few years.
And it's not a crazy point. Patient money has been the money that's working the last few years. Obviously, you don't want to be super, super patient. But if you're holding, like I've been raising cash, if you're raising cash, it's not the worst thing in the world. Because if we see a little bit of a pullback, which is not insane to say, given the S&P's up 5-6% year to date, it's been 2 months, less than 2 months of trading. Some of these stocks like SMCI, Nvidia, et cetera, then maybe we do get a little bit of a pullback. But again, I think Nvidia numbers are going to determine most of those pullbacks if they happen, and February inflation numbers. Palantir 2234, 4.5%. It's now down basically 9% over the past 2 days. It was down 4.26% yesterday. Now at 4.53%. You got Enphase down 3.29%. SolarEdge down 16% in the pre-markets. The reason for that is because they are continuing to guide for really bad gross margins at negative 17%. And they are showing horrible top-line growth, guiding for $175 million of revenue. Obviously, if rates are high, it's going to be hard to finance solar. So that's not necessarily the best thing for SolarEdge right now. Enphase took a little bit of a cut because of their earnings, but Enphase is starting to move independently of them. Enphase down about 3%. on the day. Rivian will have after the bell. So we'll have Rivian and Nvidia after the bell. So that'll be exciting. We'll see what Rivian reports. Nvidia 681 down 1.85%. It's going to be really interesting in 10 minutes. Does the market open excited for Nvidia, or does the market open kind of scared for Nvidia? Even Bitcoin, I think this Nvidia thing is affecting Bitcoin. Bitcoin's down about $2,000, 50,977, and Ethereum at 2,887. It touched 3,000 yesterday, but had too much sell side pressure in the 3,000 range. SMCI down about 4.39%. Snowflake took a beating yesterday, down 4.4%, now down 2.34% in the pre-markets. Again, Coinbase down 4.7%, Roku down 1.19%. This is after it fell 19% last week, 6% yesterday, and now 1.19% today. So Roku is starting to fall off. Let's talk a little bit about SoFi. I actually want to do a quick little segment on this because I tweeted this yesterday, and I think sometimes the SoFi bulls, which I am one of, are a little bit, I would say, and I want to get your honest opinion, guys, in the chat. Sometimes I feel like they don't look at what's actually happening, and it's really weird when this happens. But I tweeted this. I thought this was really reasonable to tweet, and people got upset at the tweet. And I'm like, okay, you can get upset at the tweet, but it's the truth. Like, if you really think this is the case, then I think you're not looking at the full picture. So here's what I said yesterday. And I think I've said this on the market open before. Let me know what you guys think. I think the ARK venture fund on SoFi is predatory. And the reason I think it's predatory, and also the reason I think ARK is actually buying so much SoFi, they bought about 4.8 million shares over the past 3 days. They bought 35,000 shares yesterday, and they bought 2.5 million the day before, and then 2 million last week on like Wednesday, is because I think they needed investors to buy this venture fund on ARK, and they needed some company to pump it, and they picked SoFi. Now, look, it's good for SoFi because SoFi got ARK to buy a shit ton of their stock. That's my hypothesis. And SoFi's like, all right, if you're going to buy our stock, yeah, we'll let this stupid venture fund on our platform and we'll offer it to our users. But it feels predatory. SoFi is not being predatory here. Kathy and ARK are being predatory. SoFi is just taking advantage of this for long-term shareholder returns, which I actually commend them for. So this is actually a bullish thing for SoFi, but I just want to bring it to people's attention because I think this ARK venture fund thing is absolute nonsense. ARK's venture fund is basically saying, hey, invest in us because you'll have access to the private market. And even though you're not one of these elite investors in Silicon Valley, we'll let you invest in Anthropic and Epic Games and Discord and Databricks and SpaceX and Replit and all these companies. And the problem I have with this is that if you're not in the venture deals at an early stage, meaning you're not in the pre-seed to Series B or even Series C, then you're not really making that much money in the venture space. Okay. Like ask the Series D Instacart investors. Series D is like you're 2 steps away from going public. Okay. So startups like pre-seed, that's the earliest stage. That's when, Jason Calacanis invested 25,000 in Uber when it was worth 5 million. He made 115 million because Uber IPO'd at 100 billion. That is where like real money gets made. And then you got Series A, Series B, Series C. By the time you get to Series D, you're doing growth investing. You're getting growth capital. You're basically, the VC fund is basically a bank. It's just a bank willing to take on a little bit more risk because, okay, they'll give some more money to you because, you're more of an established business, but it's not like they're taking that much of a risk because the business has already proven itself and now you just have to go public. Most of ARK's VC fund, if you actually read their prospectus, is doing 50 to 80% of their investments in late stage or growth stage companies. So yes, they have SpaceX, but at what valuation? At 175 billion? Is that a reasonable valuation? They have Discord. At what valuation? The Series F? At 10 billion? Is Discord really worth 10 billion? Anthropic, at what valuation? So to me, like Databricks was valued at 43 billion in 2021. If they went public in 2022 or 2023, that valuation would probably be cut in half. The public markets would have been worth. If Palantir got to about 15, 18 billion valuation, you think Databricks, even with their higher growth percentage, is going to be able to withstand that? So to me, I think buying this ARK venture fund as a way to democratize the ability to have access to Silicon Valley is absolute bullshit. It's complete bullshit. It's ridiculous. And obviously I've been in the startup world. I understand startups a little bit. Startups are very difficult. I've had startups that didn't work out. So the idea that you can invest in this ARK venture fund and have the same exposure to startups that the VCs do, it's just marketing. It is pure marketing. I was asking someone yesterday who invested in the fund, do you know what valuation you bought these companies at? And they said no. So you literally just bought SpaceX because, it's SpaceX and it's Elon. Like, why wouldn't you wait until SpaceX goes public, pay a little bit more of a premium, if not pay the exact same valuation that ARK's paying, and you have a ton of due diligence because they actually have to report their numbers. So, to me, if you get in Stripe when the Stripe is worth 95 billion, you're not really getting into Stripe. You're getting into the last stage of Stripe, which means you're not really making that much money. Now Stripe has to go from 95 billion to 180 billion just to 2x. And if you're in a VC fund, you should be expecting massive returns. That's the whole point of venture capital. You're taking so much risk. Like if you're investing in SpaceX while it's private versus, I don't know, Palantir when it's public, the whole point is that it's a private company. It's a cheaper valuation before it gets access to the public markets. And I'm taking a heightened risk because I don't know anything about the financials, right? Because if you were actually an investor, you would get access to the data room of SpaceX, like all the VCs do, so they can look at every little metric. You don't have access to that with ARK's VC fund. I don't think they're giving millions of investors access to all of SpaceX's confidential financials because they wouldn't be confidential at that point. And they're saying, just trust us that we bought it at a good valuation. To me, that's kind of ridiculous. I mean, I think that's kind of ridiculous. And I would really want to know in the chat, what do you guys think? Because some people were saying, oh, no, this is like really good for SoFi, yada, yada, yada. It's good for SoFi because they get Kathy to buy the stock. Because I started to realize, why is Kathy buying SoFi? She doesn't buy banks. She doesn't buy financials, right? The reason she's buying Robinhood is because that's more of a brokerage. That's like a fintech play. That's not really, traditional finance. She's not buying PayPal, obviously. She doesn't buy Wells Fargo or Bank of America. Why? SoFi is a bank at the end of the day. Why is she buying a bank? I think she's buying a bank because they partnered with her to allow this venture fund, which is really good news for SoFi because millions of ARK investors now get to be exposed to the SoFi name. But it's not because, she's interested in student loans. I don't think that's the case. So, okay, some people said agreed. Good. Some people said agreed. I hope you guys are not just saying that because you're on my channel and you guys love me. But there were some people in the chat saying, let me show you what Chris said. The other Chris, data-driven investing. Let me show you his response to give him a fair choice. We got the market open in 3 minutes. He said, you are cherry picking one of the worst VC bubbles ever in 2021. The Uber Series D would have given you a 10x. Palantir Series D would have done very well. So you're just cherry picking their 2021 valuations, which is why this is not a good comparison. Dude, I can be picking cherries. I can be picking pumpkins. I can be picking apples. I can be picking bananas if I want some potassium. The point is, ARK invested in one of the worst VC bubbles, which is 2021. So if you're investing in the ARK fund, you're investing in the VC bubble, which is 2021. So it doesn't matter. Like this is not, maybe in 2031 things change, but so far you're investing in Discord, SpaceX, and maybe these are great companies, but are they great valuations? And if they're not great valuations, to me, this thing is completely predatory. They're hoping random people see the name SpaceX or Discord and like, oh my God, I feel so bad that, I'm an outsider from Silicon Valley. I don't have any connections to Stanford or Harvard, so I can't get into Discord. But SoFi and Kathy are going to be the savior for me to get access so my precious capital can be invested in Discord before everyone else gets access. Next thing you find out, Discord goes public at like $2 billion above the valuation you bought it at the ARK fund. And now you're just invested in a public company that Kathy got in a year or two before it went public. Like that to me is not, if you don't have access to venture capital, I'm sorry, you don't have access to venture capital. It's a very elite, unfair world. You just don't have access to it. So to me, it's, that was a savage flow I can pick. So to me, I don't know. Now, granted, I think it's good for SoFi. We got the market open in 1 minute. I think it's great for SoFi because they're getting a ton of people to know about their name, but it is, I would be very skeptical to buy ARK venture fund on SoFi. Just because of the idea that they're going to, outperform all the ETFs. And maybe they do, and I'm wrong. But the idea that they do because they picked companies at the early stage, quote unquote, early, I don't know, dude. It's hard to imagine that that's necessarily going to be the case. All right, so that was the rant on SoFi. Still bullish on SoFi. I think SoFi $12 end of year is very possible when rates come down. I think SoFi, honestly, 15 to 20 should not be out of the direction. But I do like to be objective here, and objectively, this venture fund is kind of doesn't make sense in my opinion. But still bullish on SoFi long term. All right, here we go. Let's pull up Nvidia. We got 15 seconds. Thank you, everybody, for being here with me. The market's going to open, and we are going to see what the reaction is to get ready on the day for Nvidia earnings. Ladies and gentlemen, Wednesday, February 21st, 9:30 a.m., the stock market is now open. Wake your ass up. Here we go. Nvidia starts the day down 2.3%. 2.3% on the day. 678 right now on Nvidia. There you go. 678 on Nvidia. CrowdStrike, 13.4%. Oh my goodness. Palo Alto Networks. We're going to do a little recap of their earnings in a second. 25%. Guys, this company was $365 yesterday. It's at 270. They went from 115 billion to 85 billion. They lost $30 billion of market cap in 24 hours. Rivian down 1%. Enphase. Okay, so Enphase is finally down a little bit. Enphase down 5%. SolarEdge down 15%. Where's Robinhood? How bad is Robinhood? 1379. That's not too crazy. Okay, so Robinhood's down 2%. That's okay. SoFi also down about 2.4%. Palantir 2254. So Palantir opens up 3% down. Now it was at 2234 in the pre-markets, so it did get eaten up a little bit. It's up 20% from, or 20 cents from where it was down. So we'll see if that continues to happen. But Palantir down about 3.8% on the day. Trade Desk $81. They're down 1%. CleanSpark, they're getting beat up, down 6.7%. So CleanSpark is taking a bit of a beating today as well. That one's down. Microsoft $399, Apple $182, DraftKings $40. IWM, the Russell, back to 197. That's down about 0.64% on the day. Someone said they muted the bell. Wong, you muted the bell. That's not fair. You can't mute the bell. That's what wakes you up in the morning. That's what you need to do that. Alibaba is green. Now, quick note on China, real quick headline. This broke 2 hours ago. China has banned major institutional investors from selling stocks at the open or close and plan to track who is shorting. So at the open or close, you cannot sell Chinese stocks. That's probably why Baba's green right now. If you're in China, you're not allowed to do that. And then they're going to quote unquote plan to track who is shorting. So yeah, if you're shorting and you're in China, you better be eating some carrots and drinking some milk and getting tall around these stocks, because China is going to come find you. Dropbox is down a little bit, about 1%. Amazon's actually up. Bezos sold another $2.5 billion of Amazon, and people just bought it up. So people are buying all of his shares. Right now, Amazon up 1.7%. ARKB down about 2%. That's the Bitcoin ETF. Lyft is down about 1%. Uber down about 0.112%. New York Community Bank down 1.28%. Where's TFC? TFC actually sold their business for $15.5 billion, not $15 billion yesterday, their insurance business. So they got a little bit of a boost in the pre-market, but right now they're down about 1.49%. Palantir, little recovery, 2270. Little recovery there. See, this is the thing. Like, yes, Palantir could go back to $17, but there is a lot of demand for these shares as it inches lower and lower and lower. People want to buy the dip. So, I mean, we would have to have a very broad scale sell-off, I think, for that dip to be really bad. And that's going to depend on Nvidia, which also is recovering. Nvidia was at 674. Right now it's 682, down 1.74%. Whereas SMCI is down 7%. So SMCI yesterday fell to 692 and then did an intraday swing back up to 795. So, I mean, if you timed the bottom on SMCI yesterday and you timed the top, you made $100 in one day, which is, and if you were playing with some big money, you might have had fun yesterday. So SMCI right now down 6.5%. We'll see how that turns out, but that one is getting hit. Maybe Kathy bought. I don't think, you mean Palantir? Maybe. Actually, maybe that's not a crazy point. Maybe. I mean, now, maybe, I mean, I think she bought right after earnings, so that was at like $21. So, I mean, does she really care about buying at $22.78? Maybe not. So, yeah, we'll see. Maybe she ended up buying some shares today. Tesla, where's Tesla? Tesla's at what, 190? Wow, Tesla's green. Tesla going against the market, baby. Tesla's like, you know what? We're green. Screw you. We are green, and we're going to stay green. Wow. Tesla's actually green. Interesting. 195. Hasi says, does she look at the price when she buys? Oh boy. Well, for a company like Teladoc, I would say not. Teladoc's down 21%. They grew revenue 4% year over year. They're not profitable. They're guiding to lose 80 cents a share at the minimum next year. So they're going to guide to continue to not be profitable. And their BetterHelp therapy thing that they acquired, that's losing people quarter over quarter, not even year over year. And then their actual like Teladoc One subscription, that's also losing members quarter over quarter, not year over year. So it seems like people either don't like the therapy that Teladoc's providing, which is why they're canceling that subscription, or they just don't like telemedicine anymore. And so that's why they're unsubscribing. But I mean, you can't be a high growth tech company in the medicine space. You're growing at 4% year over year. They did $661 million of revenue. I mean, this stock was at $300 at one point. Now it's down at 21. It's down 21%. Now, granted, I was looking at Teladoc 3 months ago, and I thought there was an opportunity there at this price. And then Teladoc ran up to 21. Now it's back at the price I was looking at. So I'm going to keep doing DD on Teladoc because I think there's something there. Not enough for me to, even kind of get excited, but I need to do a lot more DD on them. The main thing is their float is very small. I think they have like 130 million shares or something. It's a very small float, and they have to do, I think, close to 500 million in buybacks. That's what management said. So that thing could go up just on like EPS alone. It could start going higher. But that's something we have to look into. Their numbers themselves are just disgusting. Their numbers are really, really bad. And so that's not the best. Honest Chill says the only reason they are non-GAAP positive is excessive DNA. They made free cash flow of 93 million. Look, well, they said they lost XYZ cents per share, and they're guided for losing 80 cents per share in 2024. So I'm just looking at their guidance. If their guidance says, hey, we're going to lose 80 cents per share in 2024 on a GAAP basis, they are saying they're not going to be profitable. Robinhood taking a little bit more of a hit, down 3%, 1365. Truist, look at that, falling below 35. Truist is taking a hit as well. So that's bad. SoFi down 2%. Palantir 2284. Palantir is trying to recover while banks are falling. Nvidia trying to recover as well, almost trying to get back to 690. CrowdStrike down 10%. Palo Alto down 24%. Rivian down about 1% on the day. Were you able to do DD on SoundHound? No, not yet. Not yet. I was not able to look at SoundHound. Where's SoundHound right now? SoundHound is down 2%. Okay. And then where's Lunar? Lunar's up another 9%, dude. What the heck? What is going on, dude? Lunar, let me look at this thing right now. Lunar, year to date, guys, Lunar is up 360%. Like, this is just crazy, dude. They're going to be on the moon tomorrow. This has to be meme stock, dude. There cannot be institutional investors buying up this company. Volume is 6 million today. Volume yesterday was like 40 million. That's just insane, dude. It's just insane. I wouldn't chase Lunar, but that thing is ridiculous, going up 360%. It's not even year to date. It's like in the past 5 days. So yeah, that one's up. That one's up pretty aggressively. SoundHound. So SoundHound, again, they got invested by Nvidia. That's why they were up 60% last week. But that's the only big thing about them. There is some promising AI technology in regards to voice applications for consumer electronics, but really it's because of Nvidia investing. Okay, Google 142. We got to talk about Google. Lunar is not a shitcoin. Lunar is a stock, but it feels like a shitcoin. We got to talk about Google. So even Chris has started to question his Google position today because of what's going on. Okay, this is what's happening with Google. You are not allowed to say, show me anything that's white on Google. There's a ton of tweets about this. If you just search it up, if you go to Gemini and you're like, hey, you just give me an image of a white man, it says, no, this is unethical. We can't do this. Now, this is fine. That's great if they applied this across the entire world. But if you show me a black man, they'll show you a black man. If you say, show me an Indian guy, they'll show you an Indian guy. They're just not showing you white women or white men. And it's getting to the point where it's just like, what the heck is going on in Google? I mean, look at this. Even if you said, hey, Google, give me a picture of a Caucasian person of the Pope. The Pope is white. To my understanding, the Pope is white. This is what they showed when you said, show an image of the Pope. I mean, it's pretty insane, dude. It's pretty insane that this is what they're doing. And so as a result of that, you've got people like Chris that have been heavy in Google that are starting to question, is this thing actually going to be able to evolve? Now, granted, is this a thesis breaker for Google? I don't think so. Okay, I don't think this is a thesis breaker for Google, but it definitely does feel like this is something that's going on internally inside the company that I don't know if they're going to be able to resolve it anytime soon. So if you said, who is Donald Trump? It says, I'm just a large language model, so I can't help you with that. If you say, who is Joe Biden? It's going to give you all the statistics about Joe Biden. Again, I think people are getting tired of this stuff, dude. Maybe they tolerated it 5 years ago when the woke culture was becoming more prominent, but I think there's an anti-culture against all this stuff, and it's becoming a little tough. So as a result of that, Google's up today, but I'm out of Google, and I didn't get out of Google because of this. I just got out of it because I didn't feel comfortable holding it at the valuation anymore. But it's at 142. It's green. It's probably green because it's got beaten up over the past couple of days. So I don't think the market's going to send it down that much further. It was at 139 yesterday. But it is kind of scary seeing Google in this position, not just because of the woke stuff, but like at what point are they going to innovate against that? That is a question about their culture. And if their culture is that uptight, like when is that culture going to change? And is that culture going to produce shareholder returns? I don't know. And so it's going to be really interesting to see how that evolves for Google. Meta right now at 463, Nvidia at 685, Tesla, wow. Tesla's going for $200. Tesla's going for $200. Oh my. Zokolt says ESG is trying to destroy my thesis. Oh boy. Oh boy. Look at Tesla. Look at Tesla run. I don't know why it's running. I don't know what the reason is, but Tesla's trying to get to $200. Tesla's trying to get there. Have you tested this yourself? Yeah, guys. So watch Finance Junkies last night. Watch Finance Junkies. Go on YouTube, type in Finance Junkies. We spent 20 minutes doing this. This is not me just showing pictures. We did it live on Gemini. You go there, watch the last 20 minutes. We typed in, we did it like 50 variations, dude. We should show me a white man, show me a black person. We then said, show me a blonde. It said, no, it's against our policies. We said, show me someone with an afro, which is obviously someone who's black. And it showed someone with an afro, right? Versus someone who is blonde, because blonde typically are people who are white. So it's kind of insane, like the level of bias there. And look, I don't blame them per se, but just apply universally. If you can't show me someone who's white, don't show me someone who's Indian. Why are you showing me someone who's Indian, but you're not showing me someone who's white? Like, are white people the worst people in the world and Indian people are the most holy? Like, what is going on here, right? Why is that happening? And so I can accept if it's a bias mistake and things can be changed over time, but I don't know if Google's going to necessarily change it. You know, I don't know what their intentions are here. And so we'll see. It wouldn't show you Jewish either. Yeah, it wouldn't show me someone who's Jewish. It wouldn't show you someone who's Israeli, because it assumes those people are just white. So it was really interesting to see what that was happening with. But we'll see what happens. You know, maybe Elon builds Grok into a multimodal LLM, and that actually is less woke. The problem is, guys, Grok sucks. I haven't used Grok in a long time. I pay for Grok $22 a month. Grok is horrible. I'm sorry. That's Blake. Don't kill me in the chat here, because I know you get mad at any Elon hate. But Grok sucks, guys. Grok is not good. ChatGPT is far better than anything Grok can produce. Gemini is way better than Grok. So I don't use Grok. I think it's trash right now. Indexing the tweets are not that good. I think it'll get better over time. It's only a couple of months old, so I don't blame it. But it is nowhere near ChatGPT, and I would not pay for Grok over ChatGPT. So I think they've got a lot of work to do. But if they want to be, you know, the anti-woke model of it, then maybe that's going to be their MO. Let's look at some of these crypto stocks. What's going on? And then we'll get Tom Lee's take on Bitcoin, and then we'll listen to Michael Saylor as well. Yeah, crypto's red. Look at that. CleanSpark down 6%. Coinbase down 5%. Dude, Coinbase was 193 last week on earnings. Coinbase is 163. It's like their earnings never happened. Robinhood 1368. Bitfarms down 7%. MicroStrategy down 4%. Cypher down 5%. This may be a good dip. I mean, we know if the thesis is intact for Bitcoin, this stuff will all be back later. But it might just be a dip in the meantime. Hut 8 Mining down 4.5%. Marathon down 5.5%. Riot down 4.3%. And then you got Bitcoin at 51,000. Let's listen to Tom Lee. Let's hear what he has to say about Bitcoin. He still believes Bitcoin can get to 150,000 this year. Here we go.
I teased Bitcoin because I have no idea. I don't know what it's trading on. Maybe I don't know what you think it's trading on now. The ETF, obviously, that was something. Usually it likes the Fed to ease. So you just said some positive things about that, maybe for more printing. But I said, and I was just throwing out a number. We're at 50. I said, what you said it might be strong for the remainder of the year.
Yeah.
I said 75. What did you say to me?
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000. So we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, that's supportive of risk assets, and Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown is going to start that soon. I mean, Bitcoin's been rallying the last couple of weeks.
Wow.
So,
dude, look at him smile with that hairdo. By the way, that hairdo is epic, dude. That hairdo is epic. Look at him just smile, looking back and forth, and the silence with that smile. He's just like, yeah, it'll happen, dude. I mean, Tom Lee's been right for a lot of things. If that happens, that'd be insane.
Take that to the bank.
those are big numbers. I don't know anymore.
And are you in, hold on, let me just go back. Are you in the camp of this is like a $500,000 valued
Over the next
over 5 years? Are you?
Yeah, it is sound money. And I think it's proving to be useful. And
Proving to be useful how?
Well,
it's very useful if you're an investor right now.
Yes, it's been a great store of value. It's been a good risk asset. It's also incredibly secure. There hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and accounting. 6% of banking transactions are suspicious, 0% on the Bitcoin.
What did Gensler say the other day, that he trusts the Oracle database more than the blockchain
The thing that
distributed ledger? That was bizarre, wasn't it?
Well, I mean, the blockchain is just one big piece of software, but I would trust the proof of work concept that you now, instead of having 5 people manage an Oracle database, you have a consensus mechanism, and that's
Right,
what's kept
exactly.
the
So, but Tom,
ledger secure.
here's the flip side of that, and you've heard it from the Jamie Dimons of the world, maybe even Elizabeth Warrens and others who say, despite what you said about sort of how good the blockchain is to be able to find where things are, it is the medium of choice for ransomware. I mean, just you go through the list of sort of terrible illegal behavior. People in that world seem to love Bitcoin. What does that say about this?
Well, pirates were the first people that liked gold, so we knew gold was a good store of value. But I think equally important, the dollar is used in more illicit activities.
99.
I know we talked about that, obviously.
99.9.
And Joe's made that point before, but you don't. So you ascribe nothing to the idea that Bitcoin is a beloved currency for those who are trying to do nefarious things.
Well, here's a way to think of it. Criminals don't trust anybody, but they trust Bitcoin. And so if you want to say what is a trusted asset, it's really what would be the least trustworthy.
This is like saying you follow the technology that starts with PORN, right?
No, I think
because that's.
I think it's like
right. I remember like videotapes and this.
It's like blaming the
Andrew spelling porn live is hilarious, dude.
object for itself for the nefarious behavior when it's the humans that are using that. I mean, can you imagine the world of pain management without strong pain medicine? Look what happens when you abuse the pain medicine. But can you imagine it with it's and I've even used you take a car or a truck.
No, of course, but some have more utility. No, but this is the difference, and I will take Gary Gensler's side on this particular description of the situation.
Yeah.
A car has immense value to society, economic value to society. There's a utility case.
But why doesn't it resonate with you?
You could argue that a strong Tylenol actually has a
but in the history of the world,
utility.
In the history of the world,
right?
If 99% of the nefarious activities were using dollars, why don't you have the same negative viewpoint towards a dollar?
Because it has a great utility in the same way the car has a great utility.
Well, because you don't appreciate the utility of Bitcoin doesn't mean that other people don't appreciate it.
The only people right now that appreciate
that's not true. That's not true. I don't appreciate it because I'm using it for ransomware. I appreciate it because it's a store of value. I don't appreciate
a store of value or
it's a store of value, not speculative.
It's so funny. This segment was supposed to be Tom Lee's opinion, and they ended up debating about the store value of Bitcoin. I agree with Joe here. The reason I agree with Joe is because there is utility in Bitcoin. Here's the utility right here. I'm going to show you guys one tweet. If you're following me on Twitter, you would have seen this yesterday. Here's the utility. Boom. I bought $550 of Bitcoin yesterday to send to someone in Nigeria. The fees were $1.95 to buy. That's because it's Robinhood. It's the cheapest fee on the market space. And it cost me 96 cents to send the money. If I used Western Union or all these different they would have charged, 10, 15% just to send the money. This was like a couple of percentage points on this 550 to send to this person in Nigeria. Okay. So that's the utility right there. The guy I was getting a service from, which I'll tell you guys later in the next coming weeks what the service I was getting from him. It's actually, you guys are going to see what I'm doing. But he needed to get paid $500. And so I bought 500 in Bitcoin and boom, I sent it. It's not a Nigerian prince. I'm not falling for a scam. So I actually had to send him the money. But the point is, there is utility, dude. He didn't have PayPal. He didn't have JP Morgan. He didn't have fucking Venmo or Zelle. He needed Bitcoin. I was like, all right, bro, I got you. Bitcoin. Boom. He got the money in 20 minutes. Good to go. Simple. Very simple. So to me, I think there absolutely is utility in this shit. And I didn't even believe in this shit last year. But now that I've been using it, I'm like, oh, there's some utility here. So it makes sense to me. Let's listen to Saylor talk about Bitcoin demand because he's going to give a little bit more clarity on what Tom Lee was talking about. And then we'll move on.
200,000 Bitcoin. You take a look at the new spot Bitcoin ETFs. All told, they own over 700,000. Of course, a lot of that is the Grayscale Trust, but a lot of that, too, 200,000 or so, is from the 9 new ETFs on the market. With this new competition, is it going to become harder to source new Bitcoin for MicroStrategy to buy?
Well, I think it's a very virtuous cycle. The spot ETFs have opened up a gateway for institutional capital to flow into the Bitcoin ecosystem. The demand for the spot ETFs, especially the new ones, net, has been far in excess of the supply from the miners every day. In some cases, up to 8 to 10 times as much demand as supply every day. This is a rising tide that's going to lift all boats. MicroStrategy has got a levered operating strategy for Bitcoin. But if you look at what these spot ETFs are doing, they're facilitating the digital transformation of capital. And every day, hundreds of millions of dollars of capital is flowing from the traditional analog ecosystem into the digital economy.
And to your point, I mean, actually, Gemini co-founder Cameron Winklevoss, he tweeted last week that the demand from the new Bitcoin ETFs, it's at least 10 times as much as the number of new tokens that are actually being minted by those miners. So really interesting supply-demand dynamics going on there. But let's talk about your existing holdings. As I mentioned in the intro, now worth around $10 billion. You have paper gains of about 70% or so, which a lot of people would like to see that sort of return. At any point, would you sell? When would it make sense to take profits there?
Well, I've famously said I'm going to be buying the top forever. Bitcoin is the exit strategy. It is the strongest asset. So what we see right now is the Bitcoin has just emerged as $1 trillion asset class. And it's alongside names like Apple and Google and Microsoft. But the difference between Bitcoin and the Magnificent Seven is Bitcoin's an asset class. It's not a company. There's not enough room in the capital structure of those companies to hold 10 trillion or $100 trillion worth of capital. So Bitcoin's competing against gold, which is 10x what it is right now. It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes. And that being the case, there's just no reason to sell the winner to buy the losers.
Now, look, love it or hate it, his argument here is not necessarily incorrect in regards to what's going on with the supply and demand of Bitcoin. A couple of stats I want to show you guys right here. We've got corporations that have cash that's at the highest level in forever. So look at this graphic right here. U.S. corporate cash is now above where they were before the COVID baseline. And it's approaching close to $4 trillion in cash. This is the highest level it's ever been since 1999. Now, why does this matter? Well, there are new FASB accounting rules, which is what Saylor has talked about in the past. And those accounting rules allow corporations to actually hold things on their balance sheet and count them as part of their assets, i.e. Bitcoin. And so the idea that you have all this cash, I mean, where are you going to invest it? Like, yes, you're going to invest it in short-term treasuries like Palantir is doing. Yes, you might be investing in an R&D and you might be doing acquisitions, but at some point, if this thing's running, it's not just the retail that gets FOMO when Bitcoin goes from, even Elon Musk got FOMO. Remember back in 2021 when Tesla bought a ton of Bitcoin? Like, I mean, to me, that was kind of some FOMO. I think they saw the thing mooning and they were like, we should get some of this. And that's how I think they were able to remain profitable in like 3Q of 2021. They made $100 million of profit off selling Bitcoin within 90 days. So like, I think corporations are going to see the ETFs create more demand for Bitcoin. The thing has already gone from 38,000 back to 53,000 in a matter of 2 weeks. And they might end up saying, hey, maybe let's get some Bitcoin on our balance sheets if this thing's going to 70, 80K, which will continue to create demand in the context of Bitcoin. That's something that I think is very possible. Now, the problem is there's not that much Bitcoin to find. I've been reading a lot of articles over the past couple of days just saying, where are these ETFs getting the Bitcoin from? And it's not that easy to find them because a lot of these Bitcoins, are not necessarily easy to just buy off an exchange. They're having to go to Coinbase. Coinbase is having to try to corner the market to see where they can find the Bitcoin. And so I think with BlackRock having almost 6.4 billion and growing by close to 3,000 Bitcoin a day, just on BlackRock's ETF alone, they've started to advertise the ETF massively as well. We are going to see a potential supply shock when it comes to Bitcoin. Now, when is that going to happen? No one knows. The halving event is probably a good indicator for that happening within the next 60 days and that being a real catalyst for Bitcoin as well. But it is getting to the point where maybe that ends up being one of the things that gets exciting over the next couple of weeks or next couple of months as Tesla continues to, or as Bitcoin continues to do what it needs to do. Let's go to the equities and see what we're doing right now. Bitcoin 50,939. All the Bitcoin stocks are down. Robinhood down about 3.5% of the day now, 1360. Coinbase 163. Let's go to Mag 7 and see how they're doing. Wow, Tesla 198. People are buying the dip on Tesla. It's that simple. People are buying the dip. Tesla fell from about 230 to 180 and now at this 198 range. People are buying. I don't think there's any fundamental news. Let me do a quick Google search of just Tesla and see what's going on. I don't think there's anything crazy that's happening. Giga Berlin is back up and running, I believe. So that's something. Oh, Elon Musk got nominated for the Nobel Peace Prize. So maybe that's the reason why Tesla's up. Arnie said he bought the dip. Well, you got other people buying the dip. Do they buy from Coinbase? Coinbase is one of the institutional custodians that these ETFs use, but they also use a variety of other mechanisms. The point is, it's really hard to find that many Bitcoin to buy, but they're getting a ton of inflows, which is why Saylor is saying, there's a lot of supply shock right now because there's just not that much Bitcoin available. So yeah, Coinbase is one of the core entities they use though to buy their Bitcoin. I'm looking at some of these headlines. General Motors is recalling a Chevy Silverado EV, so that's not good for GM. Tesla China owners drove total of 434 million miles during the Chinese New Year holiday. Okay. Oh, FSD, that's a headline that came out over the weekend. So FSD 12 beta, 12.3 or something, has been given to a lot of people. So a lot of people are now running on that. But no major headlines that are out there right now to justify kind of the 11% run we've had in the past week. V12 is helping Tesla. Yeah, I think V12 is probably the thing that people are getting excited for. It's V12 wide release. Yeah, again, to me, Farzad was saying this the other day, who's also a Tesla creator. He's saying 2024 is the year to put up or shut up for FSD. And I think most people would agree. Like, I don't agree with that particularly because I think FSD is really hard and I think it might take till 2026 and I'm okay with that. Like, I'm not in a rush to see that happen. But I know for the long-term Tesla shareholders, they've been pretty upset that FSD has been promised since 2014. 10 years later, either it comes out or it doesn't. I think even if they want to roll it out, there are regulatory hurdles they need to go through in order for that to become mainstream. And if they do roll it out, it's going to be city by city. It's not going to be country by country. So it's going to take some time for FSD to happen. I would say 2 years conservatively would be, or optimistically actually would be the time frame. But I think a lot of people definitely want FSD to start happening now. Let's talk about FUBO. FUBO is suing Disney, Fox, and Warner Brothers for their sports streaming plan. Let's get an update on that, and we'll talk about that. They unveiled that plan like 2 weeks ago on Disney earnings, and FUBO stock fell 10%, and they're not having any of this. So here we go.
The sports streaming service being created by ESPN, Warner Brothers Discovery, and Fox. Now, FUBO TV is filing a lawsuit against the joint venture, claiming it will put a stop to its plans to offer a small bundle of sports channels and make the business more expensive. Now, FUBO is a sports-first streaming platform, so they are saying that this new joint venture essentially steals their idea. If you take a look at the stock price, it's down about 20% since this deal was first announced. FUBO is also saying in that lawsuit that they have been charged above market prices and that the creation of this service is going to incentivize a lot of these companies from offering their products to someone like FUBO, because you would think they just want to keep that close to the joint venture. But this is just an example, I think, of more pressure that's going to be on these companies and more turmoil that's going to come from these new joint ventures, from these companies coming together when you think about antitrust.
Yeah, I think to me, one of the main takeaways here is just when you see these headlines in business news and people get excited or maybe not excited, but sort of start taking in the new product that we're going to be getting, you have to remember that the product isn't necessarily set in stone yet. And the fact that
there's a lot of question marks.
This could potentially still not happen. It is not something that is confirmed happening on a confirmed date. There are a lot of hoops to get through here. And I think this is maybe that first reminder for just the general audience, the streamers themselves that might have been potentially waiting for this product to come out or wondering when this product would come out, is there are large questions here that do need to be answered before we see this true sports bundle sort of come together.
Now, this is really interesting. I think FUBO is suing as a last-ditch effort to stop this from happening. I don't think this lawsuit will be successful. I don't know how you can. I mean, first of all, you're FUBO going up against Disney, Warner Brothers, and Fox. I mean, I think they're just going to outspend you on legal fees. I mean, FUBO's market cap is 545 million. Disney could spend 545 million on a couple lawyers. I mean, like they will. So I don't think this lawsuit is that strong. Just hearing it now, I'm not a case law expert, but I mean, it's our idea. Like, come on, dude. Streaming cable packages, these are not your ideas. You didn't innovate this stuff. Maybe you have some IP around that concept, but I doubt it's anything that substantial that can't be used. And this is just big guys coming together to crush the little guy. Now, from an antitrust perspective, I don't think this is a big enough deal for like the FTC to get involved into this. So I don't know. I don't know what would happen with this one, but to me, if you own FUBO, it's definitely not good news. The question is if this goes through and if this takes away market share from FUBO over the next couple of years. Lunar has been halted. Wow. Lunar's halted. Lunar got halted. It was at $12 last time we checked. It's at $9.78. Maybe it started to fall aggressively. Maybe it started to fall pretty bad. Look at that red candle right there. Yeah. Look at that. Lunar got halted. The SEC was like, okay, we finally got to come in and do something about this. Tesla's the only green in a sea of red. Look at that. Palantir 2258. Palantir still in that 2250 range. Tesla 197. So Lunar's halted. We'll get an update on that in a couple of minutes and see if that continues to be halted. But that one fell from $12 to $9.78. It was up 360%. Now it's up only 300%. Lunar encountered gravity. Yeah, literally. This is what happened. Lena Khan did everything to stop Microsoft Activision deal. Yeah, she wasn't successful in that. And so now you got Lunar. And now you got the FUBO. We'll see if the FTC gets involved in that. But if Lena Khan is that obsessed about FUBO and cable streaming, first of all, this is better for the consumer. If Disney and Fox and Warner Brothers come together, it'll be cheaper. So if the FTC's concern is it good for the consumer or not, this is way better for the consumer. In American capitalism, if you can't compete, you lose. Like this is checkmate. This is the nature of capitalism. If you want to compete with Instagram and Instagram steals your feature, i.e. Snapchat, and they beat you at your game, you lose. And it is what it is. This is the nature of capitalism. I don't know if FUBO has a real argument here to say that this is competition that's hurting them versus this is just competition that's part of the game of American capitalism. I don't know. We'll see what it ends up saying. Nick has a good comment here. It says, Amit, you were going wild when Palantir hit 22. Let's not lose all that side. Yeah, I mean, that's one thing. That's a good thing to remember. Palantir was at 16 before earnings. Now it's at 22.50. I know we've been very privileged as Palantir shareholders to be in that $25 range, thinking we're going to get to 26, 27, 28. But if we fall back to 22, look, it sucks if you bought high at 24, 25. And I think I did my best on this channel to be like, please do not buy this chasing this because it's going to 30. Like it's because 30 is like almost a $70 billion market cap. It's just not reasonable. I was listening to some Palantir Twitter spaces a couple weeks ago, and you have these people saying, oh, it could be $100 by March. And I was just like, it's like the euphoria can only be so high until reality comes in. And the reality is that the market's a little bit overstretched right now. So 22 is still phenomenal. Even $20 from 16, that's up 30% after earnings. That's phenomenal. And now we just got to see, is that dip going to get bought, or are the people that ended up buying shares at those higher levels going to DCA? That's going to be what ends up happening over the next couple of weeks. But regardless, $22 on Palantir is still phenomenal. Most of you guys, if I don't have it wrong, have averages well below $22 because, you've been keeping up with the channel for a long time. You've been into Palantir for a long time. Palantir now $22.84. So there should be a hefty margin of safety here for Palantir for everybody. Okay, let's go through some macro headlines. We got a bunch of stuff happening in the macro. So first headline, Japan has officially lost its spot as the third largest economy to Germany. Germany is now the third largest economy against Japan. So that's one macro headline that we've got. Japan falling to Germany. Second one, we talked about this yesterday, but this today has happened at a peak. U.S. mortgage rates are at the average contract interest rate for 30-year fixed mortgage rates in the U.S. soared 19 basis points to 7.06%, which is the week ended February 16th. So we'll see what happens next week. Mortgage rates moved back above 7% last week following news that inflation picked up in January, dimming hopes for a near-term cut. Potential home buyers are quite sensitive to these rate changes as affordability is strained with both higher rates and higher home values. One of NBA's chief economics, Mike Frantoni, says. So we got mortgage rates that are high. Next headline, Canada new housing prices have fallen. They're down about 0.1% month over month in January 2024, following a flat reading in December and missing the market estimates of a 0.1% rise. I don't know if that's the worst thing in the world. I think it's actually good that prices are down. That might encourage more buying based on the Canadian market. But overall, in Calgary, Montreal, Vancouver, and Ottawa, prices are down year over year in Canada. Philip says, I'm up only a measly 120% on Palantir. Yeah, only a measly. And if you hold on to that for a long time, I mean, you know, in the next 10 years, who knows, dude? That's like, maybe that's a 10x position. So falling to $22 is not, to me, the biggest deal in the world. And then final headline, South Africa's inflation rate rose 5.3% in January 2024, up from December's 5.1%, but it's below targets of 5.4%. So in South Africa, food and non-alcoholic beverages is up, health is up, transportation is up, and miscellaneous goods and services are up as well. Consumer prices are up 0.1% in January. It seems like inflation across the world is not necessarily going down per se. Definitely not in the United States yet. I mean, it's going down, but not at the level we want it to go down. So we are seeing inflation in Canada, Germany, and South Africa start to tick up just a little bit more. Okay, let's see what else do we have here. Let's go back to equities. Palantir 2264. Lunar, is that still halted? Wow. It fell 8. Guys, someone just dumped a crap ton of Lunar. This is why you can't chase this thing, dude. Imagine if you bought it at $11 or $12. It's at 870. It's down almost 30% from literally 20 minutes ago when we looked at it. So someone just dumped a crap ton of Lunar, and the SEC was like, no, this is way too quick. You can't be dumping that quick. That's what's happening on Lunar. So if I look at Lunar right now, let's actually, let me pull it up on Robinhood. It'll be easier to see what it's looking like. Wow, this one's getting hit. It was dumb money. Yeah, I do not think the Toots were buying Lunar because they're going to the moon. I don't think the Toots got excited about that. Yeah, talk about a rug pull. So look, in the past 3 months, it's up 185%. Literally, January 26th, it was $2.57. Today it peaked. It should be $12, not $10.99. $12. Now it's down to $8.70. Year to date, it's up 230%. It was up 360%, which means it's lost 130% of gains in the past 10 minutes or 20 minutes. This company went public in 2021. I think this is probably a SPAC. This had to be a SPAC, dude. November 2021 has scarred me for life. Anytime I see November 2021, I know that's SPAC days. So that's probably a SPAC. And then, oh wow, 2023 they ran up. Holy crap! They went to $40 in 2023. I didn't know that. So this company went through. They probably did a reverse split or something. This says $81. February 22nd, 2023, just around this time, literally around this time last year, they had this crazy run, and now they're having a crazy run again. Almost on the year to date, February 22nd, 2024. And Imnop says maybe something happened with the mission to the moon. No, I mean, I'll look it up. I'll see. I doubt anything happened for the mission to the moon. I think people just dumped. They took their 300% year to date. I think, yeah, look, this was a SPAC, dude. This was a SPAC. Look at this. Lunar company, Intuit emissions, stock surges 50% to trade above SPAC debut price. The company's first moon mission called IM-1 continues to be in excellent health. I don't see any updates that the moon landing is not going to happen by 5:50 on Thursday. But I just don't understand why this company was worth $2 billion because it landed on the moon. Like, what's so special about that? We don't even know if they can monetize any of the data they get from the moon. Like, it doesn't seem like it's that interesting. I mean, that's crazy, dude. This thing jumped 300% in 4 days. Did anyone buy this in the chat? Be honest. It's okay. You can be honest. Did anyone buy this? I feel like some of you guys bought this shit. It's okay. I've made my fair share of buys. We can all deal with it together. But if you bought this, put it in the chat. If you actually bought this shit. And if you did, look, I'm not saying to get the hell out, but it doesn't look like it's stopping at 870. It looks like this shit's going. James says he bought it. Put your average if you bought it. Put your average if you bought it. Oh boy. Amit, have you thought about doing an interview with Brighter with Herbert on YouTube? I like that channel. I actually was listening. So I have a pretty big announcement to make in the next couple of weeks. And it's not that software I was working on. So there's two announcements. Number one, I'm working on a software. It's going to be for Palantir investors. One big update on that is last night, we figured out the biggest bug. Last week, I told you guys we had a really, really big bug that was stopping us from moving forward. We fucking fixed that shit last night. Me and my dev, we were sitting for about a good hour or two and we fixed it. So that means that software will probably be able to launch in March, early March. That software will cost $42.69 per year, $3 a month. I think the value will far exceed the yearly subscription and the unlimited use you will have if you pay a yearly subscription. So update on that software should be out in about 2 to 3 weeks. And I think it's going to be really fun. The marketing is really fun. I'm making a bunch of these videos. I think you guys are going to, it's going to be a fucking fun piece of software. And, you know, it'll support the channel, but also I think it'll be worth paying for. $3 a month. I think it'll be reasonable. So that's one update. The second update, which is something I can't say anything about, I will be announcing in a couple weeks. But it has to do with Brighter with Herbert's channel. That's all I'll say. So it's so ironic. You asked me, you know, are you doing an interview? I'm not doing an interview with the guy. I don't even know the guy, but I was watching his channel 2 days ago. I was watching an interview on his channel. And let's just say that interview on his channel has to do with the announcement I will make in a couple of weeks, because it's a pretty big announcement. And Brighter with Herbert did an interview with someone. So that's why I have to announce what the interview he did with the person is directly correlated with the announcement I have to make. So it's going to be an exciting March. We've got two really big announcements. Number one is the piece of software that I'm coming out with, which I think a lot of you guys will enjoy if you care about Palantir. I mean, now that we fixed the big bug, it is like smooth butter. I've been playing with this shit since last night. Like really, I stayed up like 2 hours last night just playing with it, testing it. I think it's going to be fun. Robin at 1366. I think you guys will enjoy if you care about Palantir. And then second of all, I really do have, I think, even a bigger announcement than that software. And I haven't talked about it at all, but it really materialized over the past couple of weeks. When I tell you guys the story, I'm going to do an entire live stream on the story of that announcement because it's such a fucking crazy story. It's like the plot of a movie. But that announcement, I cannot publicly announce until something officially gets done. And then I'll announce it in 3 weeks. But I will make the announcement. Kelly knows what it is. Kelly's in the chat. You know, I had to tell Kelly, guys. I had to tell my girlfriend. I had to tell Kelly. So Kelly knows what it is. But I really couldn't tell anyone. I haven't even told Chris. I haven't told anybody, quite frankly. So it's really been under wraps. But it'll be fun. It'll be exciting. Are you getting married? No, I'm not getting married. But it's a fun announcement, dude. It'll be fun. You guys are gonna, let me just say, you guys are gonna lose your shit when I announce it. Like, I lost my shit. I'm still losing my shit every day. I still can't believe it happened. I know I'm teasing so hard, but like, I literally can't say anything, and I'm sorry for teasing this much. But you asked that Brighter with Herbert question, and that's what it has to do with Brighter with Herbert. And you guys will find out why it has to do with Brighter with Herbert. So it'll be fun. Mick got a job at Palantir, no. But you know, ironically, Palantir has a role for content strategist. They actually have a role for content strategist. And let me show you guys the role real quick. It's a really cool role. They want you to apply. Let me see if I can pull it up. And like when I was reading the role, I was just like, dude, this is basically what I do every fucking day. Like I don't even get paid for this shit. YouTube barely pays me for this shit. So no, it's not. It has nothing to do with Palantir, guys. It has nothing to do with Palantir. It's not an interview with Sean, not an interview with Carp. It's nothing. It is such a crazy announcement that you guys aren't going to believe how I even got this shit to happen. But it is a big fucking announcement. It has nothing to do with Palantir. So look, this is the content strategist job. The role. We're looking for a content strategist to join a cross-functional group of creatives who are responsible for communicating Palantir's work and values. As your responsibilities, you will make social posts, web copy, product content, video scripts. Boy, do I know about video scripts. Producing content for events hosted by Fortune 500 executives. Social media strategy across LinkedIn, X, Google Ads. Defining and refining internal processes to scale our content operations while maintaining quality. It's a pretty cool job, but I'm not applying for this shit. Because if I apply for this shit, I won't be able to do YouTube anymore. I'm pretty sure if I get that job, they'll be like, all right, you can't talk about the stock. You can't do your newsletter. Like they wouldn't allow me to do it because then I would be working for Palantir. I wouldn't be working for Amit. So the job is cool. But number one, I just, at this point, I don't think I'm an employee, dude. I've never been an employee. I've been an entrepreneur literally since I was fucking 17 years old. I think I'm going to be an entrepreneur till I die. You know, I've had a lot of ups and downs, but I think I'm just like, it's just hard for me to get back into that mindset of being an employee because I've never really had it. But number two, if I was an employee for Palantir, even if they paid phenomenal, give me stock, all this stuff, like I wouldn't be able to do YouTube because they wouldn't let me talk about the company publicly if I had to talk to 17 different product managers before I can issue a Twitter post. Right now I just tweet automatically, but if I had to clear all my posts with them, they would be like, it would just be a hassle. So to me, I think there's way more upside, first of all, in a personal brand. Like, a job is a job at the end of the day, dude. It doesn't matter how exciting the job is. A job is a fucking job. Like, it's in a job. Building your own brand and building your own, media empire, whatever you could do, it's less likely to succeed. But if you succeed, the upside is way higher. So that's why I'm not applying to it. But I think it's a really cool job. And if people do want to apply, you can definitely check it out. You definitely check it out. John says they're applying. Yeah, dude. I think if you're passionate about Palantir, you should apply to it. You definitely should apply. It's a really cool opportunity. And the fact that they want someone who just is going to do content full time, that's kind of like a dream job. Kind of a dream job, to be honest. So it's pretty cool. Robinhood 1365, Palantir 2263, SMCI 761. SMCI really not falling that badly. Where's Nvidia? Nvidia 683 down 2%, SoFi 822, Palo Alto Networks down 26%. I was going to talk about them. The big thing for these guys is they're only growing 19% year over year. They're guiding for 15% year over year growth. And their GAAP net income margins are not really growing. Also on the call, I think they mentioned, by the way, we tried to listen to their call yesterday and they opened up a Zoom meeting and I couldn't even stream it because the audio was all messed up. So that already, I think that's the reason why people sold off the stock, that they're using Zoom for their earnings calls. But the other thing about them is they kind of hinted at weakness in the demand for cybersecurity, given some of the things that have been going on. And as a result of that, that's why CrowdStrike and Zscaler fell as well. So that's why you see them down 26%. But also, I mean, dude, they were up a lot. Like, let me go to their chart real quick. PANW, I think they were up almost 50% over the past year. Let me see. Palo Alto Networks, year to date, they're down 7% only. So that means they were up 30% going into the read. And then over the past year, yeah, they're up 60%, dude, from the past year. The past 5 years, they're up 300%. The past year, they're up 60%. So this was probably a needed pullback. If anything, if you really like the fundamentals of Palo Alto Network, I don't really know them too well, but this could be a hell of a dip. I just don't know the company so well, so I wouldn't necessarily buy that dip yet. But down 20%, down 26% seems more macro related and valuation related than actual company related itself. Enovix had earnings as well. We watched that yesterday on the stream. Enovix is a battery company. They're down 7%. This is a long-term bet. They increased revenue by 700%. They went from 1 million to 7 million, but they bought a company that accounted for the majority of their revenue increase. So it's not like they actually made that much revenue. This is like a startup you're investing in the public space, as Vitaly said last night. So to me, this one's not that exciting just because I just don't want to have capital tied up in this. But yeah, this one also, it was up 20% after earnings, and then eventually it started to come back down. All right, I think that's pretty much it. Thoughts on Shopify? Where's Shopify? They fell pretty badly after earnings, right? 77. Where were these guys? These guys were at 91 before earnings. Yeah, I mean, look, I don't understand their valuation yet. And I've never had time to do a deep dive on them. I probably should. Maybe I should talk to Tanner. Tanner knows Shopify really well. 99 billion, is that worth paying for Shopify? I don't know. Price of sales of 15, it looks kind of expensive. I don't know. Like, are they still, they were profitable during COVID. I don't know if they're profitable right now. I really have to look into these guys, but I never got excited about Shopify. The company is very exciting. I've used Shopify before. In fact, I wish I bought Shopify stock versus starting a Shopify store back in 2017. I was trying to do drop shipping and e-commerce and I sucked at it, but I got a lot of experience. But I wish I just bought their stock. Their stock was like $15 in 2017 versus, I wish I got into the stock market in 2017 versus these other random entrepreneurial endeavors. Because quite frankly, most entrepreneurial endeavors fail. And it was good experience. I'm not going to lie. It was good experience, like trying to set up Facebook ads and, sell stuff from China through drop shipping. But I wish I had just stumbled upon the stock market, because I would have taken a bunch of L's from 2017 to 2020. And then before the greatest run of our lifetimes in 2020, I probably would have made some money versus like not make any money in 2020, which is insane. If you touched like anything in 2020, you made money. So I had to take my lessons in 2020, but I wish I discovered it earlier, because there were a lot of good companies that were cheap in 2017, dude. A lot of good companies. Toby just retweeted you. Oh, that's so cool. That's so cool. Toby Luked, right? Oh, that's awesome. That's great, John. I love it. That's so cool. He's very active on Twitter as well. He's very active on Twitter, so that's super cool. I listened to the call. Palo Alto is investing more for future growth. Yeah, and that's probably why they're down, which is why I think it might be a good dip. I just don't know anything about the company, but down 30% off 19% growth, which is not amazing growth, but it's not horrible growth. I mean, I don't know if that's necessarily justified outside of the valuation just getting up there. Bitcoin, 51,159. Bitcoin, a lot of sell side pressure at 52.53. So we're seeing that fall off. Ethereum not falling off, though. Ethereum has outperformed Bitcoin. And Ethereum right now is staying in that $2,900 to $3,000 range. So that one's doing well. ARM is up for the day, actually. Surprisingly, ARM is actually up. PayPal, this stupid stock won't move up or down ever. It's just going to be stuck at that $58 range. So PayPal is PayPal. Celsius 62, down 2%. Roku 67. Coinbase 165. Rocket Lab 469. Verizon is green. But yeah, PayPal, someone's got to do something about PayPal, dude. Someone's got. I don't know when the buybacks are happening, but I feel like the buyback should give it some momentum. And I don't know if they're executing the buybacks yet or not. But that one's down. CleanSpark also down about 4.8% of the day. Google 142. And where's Palantir? Palantir is at 22.58 on the day, down about 3.5%. All right, guys, I think that's it for me for today. Today is going to be a very exciting market close. We're going to have Nvidia and Rivian, but Nvidia is going to be the big guy here. I'll have my friend Jose, who's on the semi-spot. He'll join me at like 5:45 to break down the call. But yeah, it's going to be Nvidia. We're going to see that thing's going to either move $200 billion up or down, and we got to keep an eye on Palantir because the entire market, because it's going to be likely moving with it. And we'll see what ends up happening with Nvidia. Sell options on Nvidia. The problem is on PayPal. The problem is I bought options on PayPal. If I had stock, yeah, I would be selling covered calls. But I bought fucking options on this thing. And if by July PayPal does not get closer to $80, guys, I'm probably out. Like at that point, I mean, I'll probably just want to hold it. They expire in 2025. So if, like I want to get out by like August latest in these options. And if I could get out at this point, break even, I would be happy. Now, granted, I think by the end of the year, when rates come down, hopefully in July, and the buybacks, they can do $15 billion of buybacks, and that factors in. I think PayPal is going to do okay. But at this point, I don't know. Let's do word of the day. Someone said thoughts on Spotify. I'll give my thoughts in a second. Let's do word of the day, and then we'll move on. Word of the day. I know this one. Oxymoron.
Oxymoron.
Okay, why did he say it like that? That's not how you say it.
Oxymoron.
It's not oxymoron. It's oxymoron. It's not oxymoron. We've all heard this word. It's oxymoron, not
oxymoron.
He's saying it like he's British or something. That's not how it's supposed to be said. A figure of speech that produces an incongruous, seemingly self-contradictory. Wait, how do you say this? Contradictory. Okay, it's a good contradictory effect. It's because it makes me nervous because there's dick inside of it, so it's hard to kind of say it. But anyway, oxymoron. We all know what an oxymoron is. I remember learning this word when I was young. Oxymoron is it's basically, what's a good example? It's like fuck, I need an example. I mean, I know what this word is, but I need examples. Like a minor crisis. Like, oh, I'm going through a minor crisis, right? It's a minor crisis. A crisis is a crisis is crisis, but like it's big, but then you have or a silent scream, or we're alone together. Like, how can we be alone together? But we're alone together, right? So that's what's happening. So that's what an unbiased opinion or bittersweet, right? These are all oxymorons. I think jumbo shrimp. Yes, that's correct. That pronunciation karma hit you hard. I'm trying to think what's like a libertarian socialist. Exactly. Right. What's an oxymoron in the stock market? I'm trying to think what's an let's do that to end the day. What's an oxymoron in the stock market? What's an oxymoron in the stock market? What are two words in the stock market that you can put together, but technically contradict each other? Yo, Alex, I hate you. Non-diluting Palantir. Oh my God, I hate you. PayPal. Yo, that's an oxymoron because it's not a pal, that's for sure. And we're definitely not getting paid. Sundar and Google. Oh my God. ARK Invest. Yeah, because what the hell are they investing in, dude? Oh my gosh. Oh my, rising PayPal. Dude, that's hilarious. PayPal gains. Lunar falling. Is Lunar still halted? Oh, it's back up now. It's 991, but it's still halted. Oh my gosh, that's gonna be interesting to track throughout the day. Risk reward. Alex Chris and energy. That's crazy, dude. There's got to be a ton of oxymorons. Oh, I got to show you guys this meme. I got to show you this. Okay, so I'm going to put my Twitter in the chat. You got to be following on Twitter to get these memes. You got to be following on Twitter to get these memes. Let me show you this. I think we can use this video for anything. I should make this video like public. I should put it on a Google Drive so you guys can download it so that you guys can check it out. But this is hilarious, dude. There's so many captions you can do on this. Okay, so the caption of this is me when my mom asks me why I haven't taken out the trash yet.
And and then on the I think, and so what I think we and obviously and there's
dude, the obviously at the end gets me. And it's like, and obviously that part gets me at the end. I love it. That's I gotta make that public so anyone can just put a caption on top of it because that's hilarious. Okay, cool. That's it for me. Someone said my quick thoughts on Spotify. I think Spotify is a fast growing business. I like Spotify. The problem is they're beholden to the record labels. They're up 0.2% of the day, $48 billion. I don't know if it's worth that much, but they grow users like crazy. They're growing like 30 million users every quarter. The problem is they can't monetize those users because all the money that they make from the subscriptions on those users goes back to the record label. So until they really figure out how to make money off those users, it's not that exciting to me, but they are growing top line. And, they're probably going to keep growing because they're, one of the best audio apps out there in the market. I watched this interview 4 times. Dude, that's hilarious, dude, right? You can think of any caption and it's just the stuttering is great. Like, we're going to play it one more time. It's like, you can think of any caption and it's just like, boom, there you go. Oh, Lucid's tonight as well. Lucid's tonight. This is great.
and there's that's and then on the I think, and so what I think we and obviously
and so what I think, and obviously that part at the end kills me, dude, because whatever you say, like, oh, what do you think is going to happen with Nvidia earnings? And like, and what I think, and obviously, and then it just ends. That's hilarious, dude. That's fucking hilarious. I love it. What's your guess for Nvidia? I think they do well, but I think the market maybe takes them down a little bit. Maybe not 11%, but I think they're going to do well. I think they're going to crush earnings, but the market might take them down a little bit. But I hope that the market doesn't take them down. I hope we keep this thing going. I hope we do. So yeah, that's it. And in general, when Karp stutters like that, I think he's trying to figure out what he's trying to say. And as someone who like talks a lot, like I can resonate with him because you're trying to put these ideas together in your head. And if you're trying to, articulate complex ideas, sometimes it's like really, there's a lot of stuff going on in your head to try to get those ideas out there in the world. Now he's talking about much more deeper philosophical topics than me with an audience that's a little bit, it's you're presenting in front of, German prime ministers and all this shit. So I can imagine he's stuttering, but the stuttering to me is him trying to figure out how do I really word something correctly. And he ends up wording it pretty good after the 25 seconds of stuttering. He ends up sounding pretty smart. Inspire Rice says, dude, he's a genius because he's awkward at AF and his brain is running at 1,000,000 miles per hour. Yeah, I agree. I 100% agree. All right, that's it for today. I'll see you guys at 3:45. Nvidia earnings. Get some food, get some popcorn, get some drinks. We're going to be there for about 2-3 hours, and we will see what the fate of the stock market ends up being today at 4 p.m. Thank you, everybody, for being here. Have a great day, and I'll see you guys in the next couple hours. Bye, everyone. Have a good one.